Welcome to The Explainer. Today, we're going to break down exactly how real estate works as an investment. Forget the opinions for a second. We're going to look at the 5 core ways it can actually generate wealth, the powerful mechanics happening behind the scenes.
So here's how we're going to do it. First, we'll tackle the big question that always surrounds this topic. Then, we'll dig into each of the 5 pillars of real estate wealth. And to wrap it all up, we'll see how they all work together to create something, well, pretty unique in the investment world.
Okay, let's just dive right in by addressing that one question you always hear in finance circles. The one that starts 1,000 arguments online and at the dinner table.
You know the one. This question sparks just endless debate. You've probably been in one of these conversations yourself, right? And everybody seems to have a really passionate, totally unshakable opinion on it.
And it is so easy to get caught in this loop, It's the best. No, stocks are way better. But today, we're going to set all that aside and focus on something way more useful, the actual mechanics of how real estate works to create wealth.
So let's start with maybe the most powerful and honestly the most unique part of real estate investing, leverage. This is a concept that truly sets property apart from a lot of other ways you can invest your money.
Think about it like this. When you buy stocks, you usually have to pay the full cost yourself, right? Well, real estate is different. It lets you use a lender's money, that's leverage, to control a much larger asset. Now, of course, this is a double-edged sword. It amplifies gains, but it can also amplify losses. That's the risk.
So let's just walk through a really quick example. Let's say you've got $100,000 of your own money ready to go. This is your skin in the game, your down payment on a property. Now, with that down payment and a mortgage from the bank, you're not just buying a little piece of the property. Nope, you are taking full control of the entire thing. So your 100 grand now controls a full $500,000 asset. The other 400,000 is from the bank. But here's the key. You get to benefit from the performance of the entire property. And this is where the magic of leverage really snaps into focus. If that $500,000 property goes up in value by just 10%, that's a $50,000 gain. But wait, you only put in 100 grand of your own cash, so your return on that cash? A massive 50%. That is the power of amplification right there.
Okay, next up. Let's look at the 2 main ways a property can make you money while you just own it. Think of these as 2 engines that are constantly running in the background, building your wealth over time.
The first engine is cash flow. It's pretty simple. It's the profit you pocket each month after you collect the rent and pay all the bills. So in this case, you bring in $3,000 in rent, you pay out $2,400 in costs, and you're left with $600 of positive cash flow in your pocket every single month. And the second force at play here is appreciation. This is just the long-term increase in the property's value. It's driven by things like inflation, population growth, and simple supply and demand. Now, of course, markets go up and down in the short term, but historically, the long-term trend has been a really powerful tailwind for property owners. So, beyond the obvious income and growth, there are 2 more forces at play here, and these are the ones that a lot of new investors tend to miss. Think of them as the hidden advantages working silently behind the scenes. So this brings us to something called loan amortization. Every single mortgage payment you make is split into 2 parts, interest and principal. That principal part directly pays down what you owe. It builds your equity, your actual ownership in the property, month after month after month. It's like a slow, steady, wealth-building machine.
And if it's a rental property, here's the kicker. This creates this incredibly powerful forced savings effect. The rent you collect covers the mortgage payment, so your tenant is effectively paying off your loan for you, building your net worth without you having to put in another dime of your own money.
And on top of all of that, the tax code has some really significant advantages built in. First, there's depreciation. It's a fantastic paper expense that can lower your taxable income. You can also deduct the mortgage interest you pay. And there are powerful tools like a 1031 exchange that let you sell a property and roll the profits into a new one without immediately paying taxes. All of this can seriously improve your bottom line. Okay, so now it is time to put it all together. Because this isn't about picking just one of these benefits. The real power, the true magic, happens when you see how all of these forces combine and work with each other. So here they are, all 5 forces side by side. You've got leverage, you've got cash flow, appreciation, that loan paydown, and the tax advantages. What makes real estate so potent is that all 5 of these things can be working for you at the exact same time on the very same asset. And this right here just illustrates the whole thing perfectly. I mean, think about it. The property's value is hopefully going up,
You're getting cash in your pocket every month, your tenant is paying down your mortgage, all of your returns are amplified by leverage, and the government is giving you tax breaks. It is that synergy that has allowed so many people to build incredible wealth over time.
So, now that you have this framework, the question changes, doesn't it? It's no longer about vague opinions from your friends. The real question is, based on these 5 fundamental mechanics and knowing all the work that's involved, is this the right kind of investment to help you reach your financial goals? Now that is the question worth answering.